Good morning everyone and welcome to Morning Markets today on Tuesday the 21st of April. A number of things that I wanted to share with you today. The first of which is what's been happening in the oil market in the US overnight, where you'll have seen in the headlines the price for crude closed yesterday at minus 37.63 per barrel. Quite phenomenal that the price of a commodity can trade at a negative price. That's a function of the futures market and how the futures settlement contract expiry for May was coming to a conclusion today, i.e. on the 21st of April. That is the technical aspect, so the physical and the future price need to converge on contract expiry. I think the bigger and more telling aspects of this are twofold. One is around the demand environment. Demand is exceptionally weak for oil and oil derivatives. We saw yesterday a number of the US airlines materially cut their capacity for later into the second quarter, with some indications that capacity, i.e. the number of seats available, will be just reduced between 75 and 90%. So a significant curtailment in demand from the airline industry. But also, just as you'll all appreciate, in lockdown, very few people are travelling, so demand for crude oil and its derivatives are exceptionally low. I think the other important aspect that's at play in the US is just the lack of storage capacity. We get details later in the week from the storage levels at Cushing in Oklahoma, which is the main storage capacity in the US. Expectations are that will be at near to or close to its peak capacity. So in effect, as the contracts were expiring yesterday, there was no capacity for people to take delivery and hence have storage of oil to take advantage of prices at this level. I think the other thing that we discussed this morning is just the reporting season that's ongoing by companies. I think the key theme there, and not surprisingly, is that the companies don't know about the outlook for the remainder of the year and what demand for their goods and services will look like. So two examples: IBM in the technology sector withdrew guidance for the full year, as did Danone in the food sector. So again, just no real guidance from companies about what they see as their outlook, indicating the difficulty that they have at this point in time. That will cause some issues for the analyst community on the sell side as they try to forecast earnings numbers for these businesses through the remainder of the year. So that's something that we will continue to observe through the course of this week as we start to hear from more companies giving their guidance or updating the market on their expectations. I think the other thing, just to conclude on today, Asian markets were a bit weaker overnight, and that just followed the trend that we saw in the US, some of which I think is related to the move in the oil price. Other things that was worth noting this morning is just the continued increase in yields for Italian sovereign paper. Why is that important? Well, it just indicates sort of the divergence still within the Eurozone, and I think more particularly the lack of a coherent plan to deal with the problems that Italy and a number of the other southern members of the Eurozone are facing at this point in time. So that's again something just to continue to monitor in terms of the rhetoric and discussion within the Eurozone as to how to navigate their way through COVID-19. That's it for today from myself. I'd just also like to point you in the direction of a new initiative that we've put in place. It's just looking at some charts that we as an investment team find interesting. Please take a look at those that my colleague Chris Leyland is producing. Many thanks.